He's a mortgage lender with Hixon Mortgage, and we're going to be talking to him. First time we've had a guest on, so that's kind of exciting. And also the first time that we're streaming this on Facebook. Usually we do this just on YouTube exclusively, but I upped my subscription to our little streaming service here. So welcome. We're going to talk about cool stuff.
Hi, Mom.
You're going to enjoy it.
Oh, wait, my mom doesn't have Facebook.
So the first thing that we do is we ask our audience every single time. We want to know where people are tuning in from and watching from. Mm-hmm. So where are you from? Where are you tuning in from? Where are you watching? You're watching the replay or the live. If you're watching the live, I'm sorry. Because it's the middle of the day, you should be eating lunch or something or working.
Yeah.
And if you're in town, let us know what part of town. West side, east side, north, south. You don't have to give us your actual address, but we want to know where you're calling in from or where you're talking from. Also, comments. If you have any questions, because we have a guest on today, let's get the questions going. I'm sure there's going to be stuff out there about rates and whatnot. So if you've got questions about those, we'll obviously try to hit that. But if you've got questions for our lender buddy here, pop them in the comments. All right. Let's see. Cool.
Grill me.
No comments yet, so we're safe so far. All right. And then there's a little thing right there. It says questions. Yeah. And then look, Derek Meyer. We'll put that up there at the bottom. Welcome.
Thank you.
All right. So, Derek, you are with Hixon Mortgage.
Hixon Mortgage.
What's that all about?
Yeah. So first, been a lender for a long time. So pushing 10 years now. And my business partner and I of 10 years now.
The same 10 years.
Been doing it for 20 years. He's old. All right. No, just kidding. We were bumping along at a company for a long time, and we just thought there was a better opportunity out there to provide a better level of service. And in my opinion, I mean, these days with technology, with just the world and how informed the world is, I think if you do not provide world-class customer service, and you do not add value to your referral partners, and you are not able to provide a profitable company for your shareholders, you're not doing it right. To me, that's the bare bones basic these days. That is a minimum obligation. You need to be pretty much the best at everything, and the end property, the end presentation needs to be spot on for that customer, and they need to have a good experience. And that's why we created this company, because we believed that we can do that for people.
And how long have you been going now at this?
Hixon Mortgage has been around for 2 years now.
Cool.
Yeah.
And then and obviously you guys are being very successful. I mean, I've known you for those same 10 years, even longer, but I've seen, you've go from, a couple of different companies and now doing this one.
Yeah.
But it seems like no matter wherever you go, the result is the same. You guys are like the number one team, the number one lender in the entire region. So
thank you. I would say we're top 5. I mean, not number 1. Well, maybe. I don't know. I'm not paying that close of attention.
Shut up. Okay, whatever. All right. So then, what's cool is, you've obviously got the whole brokerage going, which to me is incredible, because I sit here, I'm like, we have this discussion a lot. You're like, I'll just start my own mortgage company. I'm like, the whole company? That's a big deal. So kudos to you.
Thanks.
Honestly.
Yeah.
I mean, it's incredible. But aside from that, so let me just ask you this. I notice on your social media that you work a lot with Polish. So how does Polish tie into all of this?
Yeah. So a few years ago, when we thought about starting this company, that was one of the components. We had a relationship with Polish. We were doing a ton of business with them already. And I think that is just because we are one of the top lenders in town. So we have a pretty good referral base and know a lot of people in town. And so
we just happened to be doing a lot of
we were just doing a ton of business with them, and started a relationship with Dan Polish himself. Hey, Dan, I know you're watching. Maybe not, but I'm not even sure if he has social media, to be honest with you. And he said he wanted to create something that mirrors what they're doing. So for those of you who don't know, Polish is one of the largest builders in the Pacific Northwest. They build a world-class product, and they build a lot of them. So what their whole motto is they want you to buy your first home with them, and they want you to continue to move up as your family grows with them. And so when they approached us to be the preferred lender and to partner up, they wanted to expand upon that. So they wanted us to tackle the first time home buyer, and they wanted us to be a client for life for them on the lending side too. I think one of the things that Polish appreciates about us is just, we do what we do best. That is what we do. We are good with customers. We are competitive with our rate and fees. And we also just really try to make it a world-class experience for everyone. And I think they appreciated that. And that's why they asked us to partner up. So I'm fortunate enough to be the preferred lender for Polish Homes, and Hixon is fortunate enough to be the preferred lender for Polish Homes in the entire Pacific Northwest.
Wow. Okay. That's a lot.
It is a lot. Yeah.
Okay, cool.
Yeah.
Well, that's awesome. I mean, like I said, we pitch Polish's products a lot. In fact, I've now got the phone number of their social media lady. She's reached out. She's like, we see you. And I'm like,
Jess might be watching this.
I'm like, we see you. And she's like, I see you too. So they've been sharing our stuff. It's been pretty cool. So, we've done a lot of business with Polish.
You guys are doing a tremendous job on your social media right now.
We're trying, everybody. All right. So since we have a lender in-house, right, we should probably ask him what's going on, right? So where's the market at right now? Obviously, man, like a year and a half ago now, like we saw the craziest like drop and fall of rates in history. And the last year and a half particularly has been brutal for people getting a loan. So go.
Wow. It's a lot to unpack.
You don't have to unpack all of it. I put it on the screen. Where is the market at now?
So, I asked you this question offline, right? So, what are rates today? Rates today are right around 7. They actually are kind of tapping 6.99-ish with a tiny little fee associated with it. I would say if you were to Google what the rates were 3 weeks ago, I think they tapped 8. They were north of 8.
Yeah.
And so, the market is definitely shifting. There's cracks in the economy. And as such, the treasury markets are that spread's closing and rates are starting to drop a little bit. And
so 3 weeks ago, we just went up and just kissed 8. And then it seems like we've seen things come down.
Yeah.
Do you think that is, so I mean,
right? A lot to unpack.
I did a video probably 3 months ago saying I was not going to project what rates were doing anymore because I had been wrong for a year.
Sure, yeah.
Because everyone kept saying
you're still wrong.
Rates are going to drop. Rates are going to drop. Rates are going to drop. Like, I'm not talking about it anymore.
Yeah.
And now finally rates start dropping.
Yeah, but I mean, it's tough because if you remember in June of this year, they started to drop too. And we thought, oh my gosh, it's over. And then they went up and they tapped 8. So do we really know? My crystal ball is smashed in the corner.
Smash for,
we look at the data just like the Fed looks at the data, and we make our assumptions and we advise our clients appropriately. Because I'm fortunate enough to work with Polish, half my book is 6 months out, right? So the question to any buyer is, what do I do if my house is not complete till May or June? And the answer is, here's what you can do. Here are your options. And then I might throw my opinion in if you want it. If it were me selling to my mom or to you or to myself and giving my opinion on what I think you should do. But at the end of the day, I mean, we're following the data like the Fed follows the data. Mm-hmm. And we have our, mortgage metrics that help us indicate what we think is going to happen. And that's how we make our decisions on a daily basis.
Yeah, I just thought about that. I remember years and years ago, you had a float down product where you'd lock your rate, but if interest rates happen to drop while you were doing whatever.
Yeah.
But then, and I thought that was really, really cool. So sorry, let me explain that real quick. You lock in your rate, you go buy a house, and then if the rates fall, you can float that rate down and match what it is if rates are kind of in this falling trend. And then I was just thinking, as you were talking about, like, because we have the same thing when we're representing buyers in new construction. It's like, if you buy it now, it's actually cool because for the most part, everyone knows like prices are only going kind of north. I mean, they've been a little stagnant lately, but the whole talk about crashes, there's just no crash happening. There's just not going to happen. If
you're a fearmonger, yeah, but if you're looking at the data, then I don't really see how it's possible.
And actually in the market every day. That's the thing that people from the sidelines that don't even know what they're talking about. Like, oh, it's going to be a crash. There has to be because the interest rates are so high. It's like, that doesn't take into account the whole story.
So I'll give you a real life scenario. This happened right before I got here. So with regard to the float down. So I had a client, it was Portland Polish home, and we locked them in 6 months ago, and they're closing at the end of this month. And it was a 180-day lock, and it costs money. It costs money to lock in long term. It does.
Yeah.
Now, I'm fortunate enough that I can lock you in long term, and it costs you money at the end if you choose to execute on the product, as in your closing costs will increase.
Okay.
Or you have the ability to float it down to whatever the rates are today at a 30-day lock rate.
Oh.
And so what I had the opportunity to do was lock someone in for 6 months, and I emailed them today. I'm like, this looks like a win. Rates were down 0.5 to almost 0.75% because a 180-day lock not only I'm getting in the weeds. 180-day lock not only costs money, but it also is a higher rate. It's a hedge,
that makes
right?
total sense.
So
because he had it locked in for 180 days, but he didn't execute on it, he didn't have to pay the fee for the locking it for 180 days.
Yeah. Yeah. So it's called it's a float down product.
If you have questions about that, you can email me later.
So I called that, to me, that's an insurance play, right?
Yeah.
We had no idea what was going to happen. And I'm stoked to see rates dropping now, but at the end of the day, I had no idea when we thought they were going to hold this line until middle of next year. And, the data and economics of everything is just starting to crack a little bit, and rates are starting to drop. So
I love that. So rates are starting to drop. That's great. I've got a market update coming out on Thursday that's going to talk about.
Don't talk about rates.
Well, I'm not going to talk about rates. I'm just going to say what other people are starting to say. And I want to pull this up on a screen too, for you to see, to get your reaction. So if we're looking at the screen here now, the Fed will likely cut interest rates 4 times next year as the economy remains resilient. But wait, there's more. Boom. Here's another one. Fed rates won't happen until second half of 2024. And there's another one. Gold prices hit record highs. Expectations rise for the Fed to cut interest rates in 2024. It keeps going. Outlier trade bets, rate cuts 2024. Oh my gosh. So many different people are now all saying Fed rate cuts are coming.
I bet a month ago, every one of these statements was the exact opposite of what it is today.
Well, yeah, duh.
So can you scroll down to the opening statement of that? So read the top again. It says the Fed will likely cut rates 4 times next year as the economy remains resilient. U.S. economy will remain resilient. That is hard to say. Making the Federal Reserve cautious about rate cuts, Barclays said Monday. That seems a little contradictory and a little clickbaity to me, but if they're going to cut 4 times, they might cut in August and potentially in September and October, November, December, like later in the second half of the year, potentially. Here's my fear with this. The affordability of homes right now is high, right? It's low, excuse me.
The unaffordability of homes.
The unaffordability of homes is high. So it's tough to get into a home right now if you're a first-time home buyer. It just is.
Totally.
Interest rates are high. Here's the flaw in the fact that if this is my opinion, if they cut rates, and it's already happening today, rates drop, my phone starts ringing like crazy. People that were sitting on the bench are going, I need to do this now before the demand comes back. Well, the demand has never left, right?
Right.
So now that the rates are starting to drop, all those people are coming off the bench to participate. So it's going to home prices are not going to dive. Rates are going to come down 1.5%, in my opinion. Don't take my word for it, but in my opinion. And all that's going to do is someone that could have got in right now is now going to have to get in line with 10 more people, and that's just going to drive the prices back up.
Yeah. So
now you're paying more for a house, but your mortgage rate is less, and the delta ends up being the same, and you're still pushed out of the market either way.
Yeah. I mean, you're preaching to the choir. I've been telling people for months now that the time, get in now before prices take off.
Yeah.
And then you can always refi later, and then you're saving a bunch of money. But it could be, and I think it'll also be interesting to see how the rates move down, how quickly they move down. The faster they go down, the faster people are going to flood the market, and the more the market's going to take off with prices. Maybe if it's a very slow, gradual drop in rates, maybe things will ramp up slower, which will be a little easier for everybody. I don't know.
Yeah. And let me just speak to something that you said earlier. I'm never a proponent of buy the house now and refinance if you don't have to. Because guys, for those of you that are thinking about buying and just doing the buy and then the refi, yeah, that's definitely a thing. And there's definitely going to be a refinance wave. It's inevitable. Yeah. But at the end of the day, the people that are going, hey, have a free refinance. Refinances are not free. You just absorb those costs into the loan, increase it by 10 grand. And because rates are so much cheaper, you're still saving X amount of dollars per month. Do not think refinances are free. They're not. They're just not. So sorry. I had to get that.
Your free refi.
I had to. If you see me offering you a credit, that's a true credit towards the cost of it. Yes. But a free refinance, no, that's not a thing.
So I hear that's
sorry.
No, this is a good soapbox.
No,
this is a good way to get on, because I hear that all the time, and I'll get it from different clients. They're like, well, I could go with this person, they're offering this. I can go, this person, they're offering this, or this person, they're offering that. They're all offering something different. Everybody, like every lender has their own little, we'll just call it marketing around a particular thing.
Yeah.
But if there's anything I've learned from you over the years, it's all really the same. They just kind of call it something different and disguise it and put a little magic sauce on the different things that they call it, the marketing packages. But it's all really the same thing.
Everyone packages it up different. And I don't know how car sales work, but if I've got 3 Toyota dealerships and one's offering a $5,000 rebate, but the car is $5,000 more than the other 2 dealerships, are you getting a deal? You're not getting a deal, right? But if you don't go look at the other 2 dealerships to know that, you think you're getting
you think you're getting
so we're all, we all sell widgets. It is a relationship game. I would say everyone in town, every lender in town that's watching this is incredibly competitive with the rate and the fees. And like I said in the beginning, the service has to be world class, and the rate and fee environment has to be world class as well. It has to be very competitive, and we're all going to do the same thing. So I think the relationship needs to be there first.
Yeah.
Does that make sense?
Oh yeah.
Yeah. So,
well, I think that obviously I know that you guys do a great job. I've used a lot of lenders in town, and you guys have always been fantastic. So not to plug you too much, because that's not why you're here, but let's go back to talking about how the rates have finally started. They are starting to tick down.
Yeah.
What I've noticed, and I'd be curious to hear your take on this, what I've noticed literally over the last 3 months, as I'm looking right now as a list of buyers that have reached out to us, we're still over the past year, a massive amount of buyers have been cash. They're coming in with cash. They don't want
to. I wouldn't know them.
You don't know them.
I don't talk to them.
You don't talk to them. So we've done a number. It's probably 60% at least. I think it actually is in the neighborhood of 60% of the deals this year have been cash. Not like our deals, but like general across Deschutes County, or at least the Bend area. I could look that stat up later, but it's somewhere between 40 and 60. It's high. It's a ton.
Yeah.
So, but even in the last 3 weeks, since rates have started falling down, it's almost as if we've even had more leads come in just in the last 3 weeks. And you would think that it would be borrowers, but it's not. It's still cash buyers. Still cash buyers are like, and I think it's almost like subconsciously they're like, okay,
I gotta get off. Yeah,
it's going to happen. And now I need to get in now before they all come in later.
Think about it. Yeah, think about it. Logic. You're spot on. If I'm a cash buyer and the market's going to get flooded in, right? It's about to get flooded again because rates have dropped. Now you're jumping in and you're not getting as good of a deal on a house, right? Because I'll be honest with you, a seller does look at cash. Well, you're an agent. You should speak to this. If I'm a seller and I've got a cash offer, but it's 50 grand less than somebody that's got a lender that's working with me, one of your trusted lenders, who you're picking?
Well,
depends on the seller's motivation, right? But at the end of the day,
it kind of depends. It depends on how well you qualified them, right? These guys are a lock. Well, then maybe we'll go with the more money.
But I think it's your list is large. We should turn the camera around so you can see it. That's one, you guys are good at what you do, but 2, the demand, as rates continue to drop and these statements continue to come out, people are going to continue to come back out of the woodworks. And I think the first wave is going to be the buyers that were with you and we're like, oh, I'm going to hang out. And then the second wave is going to be that new batch of buyers like we were talking about before, where they don't know any different. They've never seen any different, and they're just jumping in the game now, and they're used to seeing rates in the 6 and 7s, not the 2s and 3s.
Yeah, right? I think that I think that a lot of those cash buyers, again, people clickbait, like we would pull the screen up, all of the different stuff, right? Go to that, and we're talking about all these Fed rate cuts and kind of like here, likely to cut the rate 4 times and blah, 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 blah. And then as the economy remains resilient, and then it's down here, it's like cautious about rate cuts. Is it cautious about rate cuts?
I haven't
or is it likely to cut rates?
I haven't heard them come right out, and maybe I'm not paying attention and be like, yep, we're doing it, and it'll happen this day. I mean, there's lots of different data points that show that they could.
Yeah.
But I think their goal is to try to make this as soft of a landing as possible. I think I feel like a recession is imminent. And I feel like, inflation coming down is a participant in this. It is a participant in this inflation coming down. So as it continues to come down, the gap is going to start closing. And what you're seeing, and what you're seeing, what you're seeing with interest rates is there is this hedge of uncertainty that's been in there for a long time. And what's happening now with rates dropping is it's now becoming clear that the economy is starting to crack, and so the uncertainty gap is starting to close. So now what's going to happen is we're going to get back to what we've known for the last 70 years or however long mortgage rates have been around. Mm-hmm. And what the traditional gap between the mortgage-backed security and the 10-year is, it's usually 200. Well, right now it was over 300. Oh, okay. So what's happening is that's a volatility gap, and that gap's starting to close because of these statements that we're starting to see. I'm not going to go that deep into it because I am definitely not an economist. But
if you want to know more about it, don't email me. All right, fine.
So
where I was going with some of that,
is
the difference between the clickbait of the article and the actual meat of the article. Sure. And just like that, the clickbait of the articles about there being some sort of crash happening, and then the meat of an article showing that prices are remaining resilient, the same word that they use in the article. Prices have remained very, very resilient. In fact, we've actually gone up this year in our overall median sales price year over year. Well, and so the thing is about the buyers, the cash buyers that are calling us in the last 3 weeks, is that they're like, they see that even though there wasn't a crash, if the word is a bottom, the bottom is probably right now. And so they see that interest rates are falling.
If it's a pendulum, we're right there.
Yeah, that's kind
we're at 6:30 rounding.
That's kind of what I think. Maybe things don't really get hot till next summer, but at least in the next quarter, I think things will probably start, kicking off. Right?
I'm not going to hold you to the stat since you don't have it in front of you, but this time last year, this year, a home price is 0.5% higher. Like quite a bit.
Yeah, it's, I don't know, it's somewhere.
Yeah,
I have a stat.
But it definitely is still trending positive. Mm-hmm. Yeah, interesting.
Yeah, definitely. It's wild. I mean, that'd be a whole nother thing. All right, let me ask you.
Email John for questions.
Email me for questions in the marketplace, or just watch all the other videos I put up here. What kind of questions do you get most? Just in general, when people are shopping you and stuff, like what do they want to know? What do they want to know? Because I don't know when they ask you.
Yeah, I get the question I get the most is it's still everyone thinks the mortgage rate is tied to the Fed. Mm-hmm. And while there is some, it's not directly tied to the Fed.
Not directly. That's kind of the words I use too. It's not directly tied.
Yep.
It's loosely affiliated.
And so people are like, oh my gosh, the Fed cut the rates, or the Fed raised, or so did my mortgage rate go up or down? And the answer is probably, but it's not directly tied to that. So that's probably the number one question. And then one I get all the time, like I had this happen just the other day. Well, Zillow says interest rates, the APR is 6.8, and this is with, insert stat here. But then if you were to Google 30-year mortgage rates, the rate's a 0.5 point higher. And so people get very confused by that.
We should have done that. We should have talked about this.
Do it now.
Because I could have, I wouldn't know where to go, but you could pull up like 8 different mortgage rate companies, and they're all going to be just a little bit different, right?
Mm-hmm. And why is that, John?
Well, that's because every lender's different, right?
Yeah, or
And
they'll package it differently.
they're
It's like the Toyota analogy,
Yep.
right? So
Nope.
everyone packages it differently. So some things that we need to talk about, some things we need to think about, and I'll try not to get too deep in the weeds, as you often tell me I do. If you're buying a home and your credit stinks, your interest rate's going to be higher, right?
Mhm.
What happened last year in May, they have these thing called loan level price adjustments. So prior to that, it didn't really matter if you had good credit and what your down payment was. You got whatever the best offering on interest rates were.
Okay.
After May of last year, and people are still not understanding this. So this is why I get this question a lot. Now, if you put less down, it has an impact. So if you have perfect credit and you have low down, that has an impact on your credit rate. So the more you put down, the better the rate offering.
The better the rate you get.
Yeah. And that wasn't a thing before. So that's kind of a thing now.
And so the more down you have and the better credit you have.
Yeah. And so what people will do is they'll Google the 30-year rate and be like, well, why can't I have 7.25? I'm like, well, because 7.25 is what, if you read the fine print of the article you're pulling, it says your score was an 800, you're putting 20% down.
Yeah.
Insert question here. So,
So
people don't quite understand that it's your credit and your down payment have an impact on the rate that's being offered. So that's why the swing is so wild.
Here's what I'm going to guess real quick. The people that are going to actually watch this all the way through are dead serious about buying.
Oh, okay.
And they want to know this stuff. I love it though.
Call me before you call John.
Got second thoughts on that. No, absolutely. Just don't let them confuse you too much.
Yeah.
Okay, so I mean, that's kind of all the questions I have. I'm kind of just going to hit this little button right here and be like, does anybody else have any other questions out there that might be watching? And do you have any questions from my side of the table?
Yeah, I do.
Oh, okay.
Were you talking to me or are you talking to them?
No, I'm talking to you.
Go
ahead.
Yeah. So is anyone paying attention about this real estate lawsuit thing, commission thing? Because will you just tell me how it works, how it worked, and what happened? Yeah, how much time do we have?
We're good.
2 minutes, 3 minutes?
No, we're fine.
So I don't get it.
No, okay. I thought you were going to ask something a little more specific, but that's pretty broad too.
Give me the 30,000 foot view to the 15,000 foot view.
So there's some people that got upset that they feel like they didn't necessarily know that the money that they paid to the listing agent was taking some of it and giving it to the person that brought the buyer.
Why do I care?
That's just what the lawsuit was about. So the truth is there's a few different lawsuits that are going on, actually ongoing.
Oh, is that why I'm confused?
Probably. I mean, that's probably why. So, but what it basically all boils down to is that there just wasn't clear and open communication between the listing agent and the seller, and what the listing agent was doing with the fees that the seller was giving to the listing agent. So typically what happens is you're a seller. I'm going to list your house. I take a commission. I take a commission of this XYZ percent, and then I will offer a portion of that commission to whoever brings the buyer out there.
Sure.
They come in, they get it. This person didn't know. You didn't know that that's what I was doing. And I don't know. They just thought it wasn't clear. So now what's going to happen as a result of this lawsuit is, well, the immediate thing that's happening is that all buyers agents like myself, and if you're working with an agent at all, that agent should tie you into a buyer's contract.
Okay.
Because what could happen is you're a seller, I take XYZ percent, and I don't have to offer anymore.
Totally.
Any of it to whoever brings me a buyer. So if the buyer comes later, I could say, here's the buyer, but that agent that represented that buyer, they don't get paid at all because I'm not offering it to them.
Sellers, if you're selling your house and he comes to you and says, I would like X, and you say, yeah, that's fine. Do you care what he does to procure that person? I would just be curious to hear your thoughts. Feel free to comment below. Because I own a house, and if I'm agreeing to pay you a percentage and you happen to have a sphere of 10,000 people and you sell my house, but someone brings a buying agent, I don't care because I'm paying you. It's completely disclosed. So now is the difference they're going to you guys as the selling agents are just going to disclose, hey, I'm going to offer 2.5% or 1% or whatever the hell you decide.
Again, that's one part of it. There was also a part of probably the more recent lawsuit talking about price fixing and saying that the listing agent wasn't allowed to negotiate with the seller below a certain percentage. And the claim was that all of these brokerages were telling their agents that this is the fee that you're required to collect.
See, now that sounds different.
Correct.
Okay.
And I've been doing this for 10 years. I've been with a few different brokerages. I've never had anybody tell me that this is how much you're supposed to get. This is how much you're required to get. I've had them say, this is a recommended amount that we would like you to, try to get out of a listing.
Yeah.
Start it here and it, you can maybe negotiate down to here, but I've never had anybody say that you can't take less than this.
Okay.
It was just a market thing. But I'm in this particular case, I was wrong because that's actually what happened. Is they were like, no, you were price fixing, and that's why NAR got their hand slapped. Mm. We still don't know the full ramifications of what's going to come out of that.
Yeah, it's going to take years, right?
But the big thing for right now is that all buyers agents should have contracts, agreements with their clients to make sure that the buyers agents get paid. And still, listing agents are still offering that compensation.
Mm-hmm.
So the buyer doesn't have to pay the buyer's agent. We're still getting it from the other side.
So the listing agent is still paying
all the same as it used to be. Yeah. We're just putting it all in writing now.
Okay.
That's really it.
So you don't think necessarily buying agents should be totally concerned?
Not yet.
But you think in the future a seller or a listing agent is going to hold all the cards, and kind of feels like they always have, but in that scenario,
I don't know.
Interesting.
I don't panic about things till they actually happen. I don't care. Like you said, your crystal ball's broken. I don't really care what happens until it happens, and we just pivot and adjust.
So what happens? Do we have time for this? Because I'm going to ask a very controversial question.
Boy, here we go.
So what happens when you represent that buyer and the selling agent's like, no?
Well, they're lost. They don't get to sell the house.
Okay. Well, wait a minute. Are you not showing them that house? And what if your buyer still wants to buy that house?
Well, that's what we have the buyer's agreement for.
Okay.
That's what the buyer agreement says. The buyer's agent's getting paid, whether it comes from the selling agent or not.
Okay. And so the buyer agency agreement, the buyer will say, okay, I'll pay you X to do this.
Yeah. Okay. Keep going.
Yeah. And so, and this actually happened to me the other day, believe it or not, for the first time ever on the settlement statement was the buying agent commission because the seller was not willing to pay it.
Interesting. You've already seen that?
I have. I didn't think I was going to see it that fast, but I did. Wow. So what happens there? So the buyer will pay it because I can't necessarily increase the loan amount to offset that cash, and that cash could be a pretty fair amount.
There are powers that be that are currently lobbying the crap out of Fannie and Freddie to allow that to be included.
Interesting.
You'll know more about that than I do, but I've heard. I've heard that there are the powers that be that are lobbying the government or whatever to allow buyers' fees to be rolled into a loan. And that would probably be the best case that could solve all of this, is all of a sudden they would just allow that to magically happen. But as it is right now, you're right. If the buyer has to pay a fee to the buyer's agent and it doesn't come from the selling side, you're right.
It's gotta come from somewhere.
You can't put it in the loan.
I can't put it in the loan right now.
We can't do a credit or anything. So they just have to have that extra cash in their pocket.
A lot of disclosure on the front end for you guys as buying agents then, right?
Yeah, I'd rather be a listing agent. If you want to list your house, call us.
Work with buyers.
Sorry, man. Peace.
Do we have any other questions?
I don't think so. Okay. I was checking the comments. We don't really have any comments coming up. So,
am I not pretty enough?
No, you're doing good. It's just a really boring topic.
I know. Everybody hates lending.
Let's go ahead and wrap it up. We're at about 35 minutes, and most of our streams are about 30 to 33, 32 minutes. So Thank you guys for watching so much. Look, you know the drill. If you're thinking about buying or selling in the area, my team and I would love to be your real estate resource of choice. And I'm sure Derek here would love to be your home lending resource of choice, right?
And as I always say, if you can pay cash, pay cash.
Yeah.
But if you can't, give me a call.
All right, guys. Thanks for watching. We'll see you over in the next video. Cheers.
Cheers.